You have the Taiwanese markets up on your screen. It's 1% lower.
Look at where the high for the banks were. Really dramatic coming into last year. So they've been on a relative basis really performing poorly right now.
It is on the risky end of the business, and it is likely to be the kind of bank that's likely to see the stress coming in first of all.
The Nifty is down 170 points straight off the back. That's a 1% crackdown in early morning trade.
What market is trying to figure out, is Fed going to remain higher for longer? If yes, how long?
Globally, we're cautious, and actually, we've been concerned about the rally we had earlier in the year. We viewed it as a bear market rally.
Equitas holders have already witnessed a 40% rise in their own holdings before, after the merger announcement has come in.
The Maharashtra budget has proposed a purchase of electric buses and conversion of 5,000 diesel buses to LNG-run vehicles.
There is not going to be much impact of the temperature being higher for a few days or a week or so in January and February.
The Nifty just below that 17,400 mark.
This will be the first IPO from the Tata Group stable after 19 long years. The last one was way back in 2004 when TCS came out of this IPO.
The benchmark indices are down 1%, Nifty hovering around 17,400. That was the day so far. Hello and welcome to Closing Bell. This is from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surabhi Upadhyay, and in the newsroom, we've got Nigel D'Souza. Afternoon, Surabhi. Afternoon, Nigel. I think this is the day where you want to say, right? Thank God it's Friday. You've got 1 hour to go. And things are looking quite ugly now. This is sharply lower for the markets. The Nifty today has breached the 17,400 mark. The 200-day moving average has been broken quite decisively. And now the level to track will be last week's intraday low of 17,255. 200 points gone on the Nifty. The sensex has crashed more than 700 points. The mid-cap index is moving in step with on the downside, moving in step with the frontline indices. The advanced decline ratio has got 1 stock in the green for 2 in the red. All the sectoral indices are currently in the red. We are roiled by the risk-off sentiment taking place globally. So in the Asian market picture, just a quick recap, Hang Seng was down 3%. The Taiwanese markets were down 1.5%. The others, like the Korean markets, the Chinese markets, also down nearly 1%. And the Dow futures is suggesting that after the steep cut of yesterday, today as well, we could be down by 175 points at open. But you've got the labor data that could move the markets, and that's going to be coming out India time, 7 p.m. So it's going to be an action-packed evening for us as well.
I think we've had enough action for the day and actually even for the week, Reema, but you're right. I think the non-farm payrolls report is something that everybody was prepared for, and we knew that is the big event that's going to ultimately move the needle or shift the needle. But then this whole issue with the Silicon Valley Bank, that came out of absolutely nowhere.
And I think Silvergate.
That too.
Also.
That too,
so it's
obviously
a combination of both these two financial accidents in a way.
Yeah, I think Silvergate, when you're talking crypto, people are still willing to sort of look the other way and say it's a crypto-specific problem. But with the SVB Financial, I think the last of the headlines did not come out yesterday. I'm really hoping we won't get too many more headlines. They will go ahead and raise the equity capital that they're looking to raise. None of their depositors will desert them. Their investors won't desert them. And then we can just go back to looking at the bigger issue in the market, which is interest rate hikes, Fed, jobs report. Because if both of these start unraveling at the same time, then this market has a bigger problem.
But you know what this SVB financial issue has thrown up? The potential losses in the bond portfolio of the larger banks as well, right? Because a lot of these banks got deposits. These were invested in longer dated securities, right? The treasuries. And they were done at a lower interest rate because that's what their interest rate was less than 12 months ago. Now the interest rate has gone up. So those bond portfolios across the board of large banks are sitting on losses. And I think very soon the markets will start, counting the losses. That's done on the flip side, the banks are adequately capitalized. Right? The balance sheet is far stronger, far more resilient, so they will be able to absorb it. But I think this is something that we'll need to watch how it plays out.
Oh, absolutely. Though, we shouldn't be painting all banks with the same brush. And in case of SVB, In particular, one of the problems has been that this is one bank that was also sitting on a lot of mortgage-backed securities.
MBS.
And that was seen as, a very lazy sort of treasury management, because MBS was not getting you much. Those were securities that were packaged and the yield was much lower than what just the 10-year started giving you with the pace of rate hikes that we've seen in the last year. And that is why, they decided to go ahead and at least their argument is that's why they decided to liquidate a huge part of that bond portfolio. But people will still ask, was there a desperate need? Why? Why do it at a loss of $1.8 billion? What was the burning need to do that so quickly, create that hole, and then raise fresh equity capital to plug it? So this debate is going to continue. It's not dying anytime soon. But Nigel, I guess it's Friday. Let's try and be optimist. I'm just saying that, at least the morning low was not breached. What it's worth, there's a fight around the 200 DMA.
Well, absolutely. I don't know what more action your ladies want today, but today has been a really poor session, because in the first 30 minutes itself, you were down, and any kind of bounce has got sold into. But if I have to stick my neck out, I think that towards the end of today, we could see a 50-point move on either which direction. So either we end below that 17,350 odd mark, which is the low of the day, or we bounce back and we end closer to around the 200 DMA on the Nifty. And that would give the bulls some bit of a hope that they live to fight another day. So let's see whether or not that happens. For the time being, any kind of bounces got sold into. That's point number one. And the second factor, I'm just looking at the ticker. And on the day when the markets are down by such a large margin, the Nifty is down 200 points, the Nifty Bank is down 850 points odd, you still have select green on the screen. I just saw Balkrishna Industries that was moving higher. The breadth of the market isn't that sort of a day when you have the index taking such a hard knock and the global Q is in a bit of a tizzy. So you still have less than 2 stocks that are declining for one stock that's advancing. So that's not such a bad breadth on this sort of a day. So let's see whether or not we see a bit of a pullback. The Nifty Bank will have to play a role, because that's pulled back 850 points. Maybe it pulls back a little bit, and that's what could help the Nifty. But interesting 55 minutes of trade coming up.
Okay, thank you very much for that. Let's tell our viewers what we've lined up on the show then. Tata Motors IT services arm, Tata Technology, files DRHP with SEBI. Tata Tech will be the first IPO from the Tata House in 19 years. We'll get you the details on everything that you need to know about the company.
Prakash Diwan and Deepan Mehta will be joining in. We'll talk fundamentals with both of our experts over the course of the next few minutes.
Our technical expert, Mitesh Thakkar, will also be joining in to discuss his top trading bets.
And finally, we'll discuss top portfolio calls with our alpha managers on the show today, Charandeep Singh and Varun Daga of Gyuric Capital. All this and more over the next 60 minutes.
How should you position yourself in the last hour of trade? Mitesh Thakkar is now with